Tom Lee here is pretty bullish on Mag 7, especially going into this week. And so this is something to keep an eye out for. I'm going to go ahead and share this video with you guys. Let me know what your thoughts are in the comments down below. After this video or after this short clip here, I am going to go ahead and go into Webull and share with you my thoughts on the Mag 7.
With all this volatility, where are we going? Let's ask Tom Lee. He is FundStrat's managing partner, head of research, also a CNBC contributor with me here at Post 9. Thank you for being here. So, Liberation Day didn't go as you thought, and you apologized publicly for that, which I think a lot of people appreciated. You're always a stand-up person about that. What now? Where are we going?
Well, I think a couple of things that we're thinking about is we know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. And if tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
Are we in a bear market? I mean, we're in a bear market, right? I mean, it almost doesn't matter, textbook, whether you say we are or not. It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes. I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person.
Are we supposed to buy into that or just stay cautious and on the sidelines, don't do anything, sit on our hands? I don't think people know what to do. And I'm not just talking in the CEO suites because they obviously don't know what to do. How can you? So what is the investor supposed to do?
Yeah, I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50. Or when the percentage of stocks above the 200-day drops to 15, those are almost guarantees of positive 1-year, 3-year, 5-year returns. So it depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical.
I hear views of, well, it's really hard to get uber bearish now because a headline at any moment, as I said in the open here, the market is waiting so hard for some bit of good news that if you're on the wrong side of that, you get a day like you had on Wednesday.
Yes. I mean, if I was to oversimplify the framing of this, U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside has it comes off dramatically, and I think stocks can actually do really well into the rest of the year.
So you'd be a buyer right now?
Yes, and with the apology that, of course, I didn't think Liberation Day was going to be this draconian, but yes, I would be buying stocks today.
What would you buy?
Well, one of the things we did for our clients last night is to look at what's called Walter Deemer calls sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in. Mm-hmm. There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think is washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound, including stocks like Tesla.
Okay. You used the word draconian. That was your word. But I'm going to play off of that and say, well, what if we're in a post-draconian period where, because of that, we're left with the rubble of that decision-making in the White House? And the damage has been done. CEOs have no visibility whatsoever. Do you see this consumer sentiment number today?
Yeah, they're awful.
Do you see where inflation expectations are?
Yeah, they've gone bananas.
Do you see what earnings expectations have done recently?
I mean, there's no ability to make guidance.
So what if the damage is already done now?
That's right. Now, we have to keep in mind this has been 10 days. So it is a shock, a high amplitude shock, but only of 7 days. So someone can restart the patient's heartbeat. I think that the White House is now keenly aware that Main Street can't handle a huge deleveraging because it is going to lead to job loss, and he's listening to CEOs. So I think there's a really big window to repair the bulk of this damage. And at the other side of this, of course, is that we have reciprocal tariffs in place that are acceptable. We have tax policy that...
All right, cool. So with that being said, I'm going to go ahead and go into the Webull chart now. Go ahead and share with you guys here. 1 second. All right. So let's go ahead and take a look at the MAG 7. This is here Bitcoin. We got Apple here first. Now, let's go ahead and take a look at in terms of a recovery, right? For all the MAG 7 here, I am going to go ahead and share with you the upside potential from the current price to the 200 daily moving average and all the way up to the all-time high. As in my opinion, I do believe that during this year, the all-time high for most of these MAG 7 stocks are going to be tested. And for me personally, I do believe that in the short term, we are going to get a potential rally here to the 200 daily moving average. Keep in mind, today is April 13, 2025, and each candle here represents a day. So with the current price from Apple here at 197 approximately, we got this move here to the 200 daily moving average, right around a 15% move. You also got that move to the all-time high, right around a 31% move as well. I think this is a pretty good dip opportunity, especially while we are below 206. For Apple stock specifically, watch for this gap fill towards about 216. Let's go ahead and go into Google stock as well. Google here, current price 157. Watch for the move towards right around 173. Again, that's the 200 daily moving average, right around a 10% move. You also got the all-time high at 206. Again, 31% move here. We've got, also in terms of entry point, I do like this entry, especially below 160. I think that's a really good entry point. Also, for most of these, I don't mind an entry below the 200 daily moving average as well, whether you're possibly swing trading or long-term investing. Okay, Amazon stock here currently at 185. I think it's still a pretty good entry between 204 and 180. Obviously, one of the better opportunities would have been below 180 down to about 160. I think this dip down to about 161 here was incredible. If you had an entry anywhere between 161 and 180, congratulations on that. The current price here at 185, if you want to compare this to the 200 daily moving average, right around an additional 8% move to the top side. We also got 242 here. Again, right around a 30% move to the top side. Going over Tesla now. Tesla here at 253. This one I've been mentioning a lot in our YouTube videos here previously. I said anything below 250, I would add a big position. Don't mind adding a small position while we're below 272. And hypothetically, if you miss 272 or you miss 250 ranges, then anything below 313, I also wouldn't mind adding a small position, especially if I'm looking for a bigger move to the top side. If I'm looking for 488 to be broken above, then obviously for me personally, I think anything below 272, anything below 313 would be a considerable dip opportunity if you're looking to possibly dollar cost average. Current price here, 252. Looking for that move to 200 daily moving average, which I do think is going to get tested here, right around 290. It is going to be a 15% move to the top side. Recently here, we hit this high of 292. That's definitely something to keep an eye out for. We tested it a couple times as well here in the recent trading days. Back out to the daily chart though, the all-time high going to be quite crazy here at 488. I do think we get this momentum move back up to the top side, right around a 93% move. Let's go ahead and take a look at NVDA as well. NVIDIA here at about 110.71. This one I also mentioned in our previous video. Anywhere between $117 and $96 is a really good entry. And then we did dip down below 96 here, down to about 86. Very, very, very good dip opportunity here. And congratulations to anyone who actually was brave enough to be buying this dip, right? I did manage to snag about 15 shares at $88 for my own personal portfolio there. But again, anything below 117 I think is a really good dip opportunity. Even below the 200 daily moving average, that's right around 126.50. I think that's a really good entry point anywhere below it, as well as I do think we are going to get a recovery here for NVIDIA. I'm looking for that recovery towards the all-time high. Current price here at 110. and again to the 200 daily moving average, right around a 15% move, followed by the all-time high, almost a 40% move. Okay, let's see. So we got NVIDIA, Tesla, Amazon, Google, and Apple. We are missing Microsoft and Meta. So let's go ahead and go over Meta here. Meta currently at 543. The move up to the top side is fairly short here, right around a 6 to 7% move, approximately 7% move to the top side. Personally, for me, between 490 and 586, pretty good entry point here for Meta long term. Looking for that all-time high at $740 per share to be tested there, and again, right around a 37% move to the top side. Last one is going to be Microsoft here. And Microsoft, I have a preferable entry range between 405 and 367. Anyone who got in below 367, congratulations as well. We hit to nearly a low of 337, which is our major support here. The test we got here was a low of 344.79. And again, let's go ahead and compare the current price here to the 200 daily moving average. And we are going to get this test, I believe, a recovery to the 200 daily moving average, right around 417. That is going to be close to a 7.5% move. Then the all-time high at 465 there, close to a 20% move to the top side. For me personally, in my own long-term portfolio, while all of the Mag 7 are at a pretty good considerable dip opportunity, as Tom Lee mentioned, that this is currently a buy opportunity. I personally really like Tesla. I also like NVIDIA at these prices. I did try to snag some while we were down at these lows. I added some at 88 for NVIDIA, as well as $96, I believe, 103, and I also added here some recently here at a 110. So again, dollar cost averaging over the several days that we've had here for this dip opportunity. Tesla here, again, Tesla, NVIDIA, both of those I really like, and then we also got some good news for Apple stock as well. Due to the tariff exemptions there. So if you haven't seen that already, feel free to watch my previous video. I talked about the exemptions from the tariffs there for Apple and NVIDIA. I think this is going to be bullish for Apple and NVIDIA during this week and possibly the remaining of this month as well. That could potentially lead the overall market to the top side. So if we take a look at QQQ, by the way, the same thing here as well. I think the overall market is going to drive up to the 200 daily moving average, right around 490. I think 490 for QQQ is going to be tested here in the upcoming few weeks, possibly even faster than people are expecting. And of course, I do think we are going to rally eventually to the all-time high for QQQ, close to a 19% move to the top side from our current prices. So with that being said, Tesla, NVIDIA, and Apple, I think are my top three. I think we're missing Amazon as well. Let's go ahead and go over Amazon. I'm not sure if I went over this yet, but we'll go ahead and go over it real quick. Amazon here, I think I did go over this, right? Down to a low of 161. If I didn't, basically, anything below the 200-day moving average is pretty good. 180 to 204 here, I think, is a good entry. Obviously, below 180 to 161 is a better entry. We are looking for this retest of the 200-day moving average, 8% move, and then 242 being retested, close to a 30% move. All right. Let me know what your thoughts are down below in the comments. And if you haven't joined our Discord yet, it's free to join. We have over 32,000 people. QR code on the right side or link down below in the description. And if you want to join our Patreon, it's optional. We do have live entries and exits for Patreon members. Again, if you join the Patreon, you will unlock the VIP channels on the Discord. Link down below in the description of the video and the QR code on the right side of the video as well, okay? Patreon currently have a permanent discount promotion going on right now as we're celebrating our 5-year anniversary. We do include live entries and exits on stocks and options, and it's from multiple analysts as well. We don't force anyone what to do, and if that's something you're interested in, highly recommend checking out the Patreon, see if there's any available open spots. Thank you guys for watching, and again, let us know down below in the comments if you are adding into any of these Mag 7, if you are waiting on the side, waiting for a potential bigger dip, or do you think we're actually going to rally during this week? Personally, in my opinion, for this week of April 14 to about April 18, I think we are going to have some greener days, and I believe we should be able to see a possible rally here for the overall market. Thanks for watching, guys, and we'll see you in the next video.